Google looks relatively cheap right now. With a PE ratio of only 23, for Google that is fairly low, maybe the stock is a buy. But I don't think so. I think the stock is still overvalued and this PE ratio kinda doesn't show that. They are still growing very well. Google search is still dominant. The bare thesis with Google is not that Google search is losing market share. That is just not the case. ChatGPT is currently not replacing Google. YouTube ads still growing. Network still growing. Cloud services, everything is still growing. Now, of course, other bets, you can ignore that. That is just Google burning money. So it's not like the company isn't growing anymore. 14% year over year last quarter. But the operating cash flow has not really moved much since 2022. It has not grown at a high rate. But stock-based compensation since then has exploded. Yes, it has kinda slowed down, but it is still extremely high to the levels it was before. It is around 10 billion higher since then. Operating cash flow has decreased since then if you factor in stock-based compensation. And now what happened other than that? The huge explosion in capex. This is something I always used to hear. Big tech is not capital intensive. That's why there's such great businesses. They can scale easily without using much capital. Well, Google is currently doing the opposite. They're investing more and more and more into their servers, into their infrastructure. A lot of this money is going straight to Nvidia's pockets. Nvidia shareholders, this bump right here, this is your profit. And if we then see capital expenditures since 2021 doubling, operating cash flow minus stock-based compensation shrinking, what do we get? Decreased free cash flow. Stock-based compensation of 22 billion, let's call it 40 billion in free cash flow. That is a 50 times multiple to the market cap. So this 23 PE ratio is very skewed. Because Google is not going to scale back its investments into data centers. Everyone else is doing it. So if they want to compete with their offerings, they have to also do it. Now, of course, you have your share buybacks. But those have also stopped growing as much because Google is running out of free cash flow. Currently buying back more in shares than they have in free cash flow. Plus now they're paying out their little dividend right here. Of course it's basically nothing, but it is also 2.4 billion in free cash flow. So currently Google is just burning their cash away. And then I think this company is currently growing at around 15%. Maybe it's gonna reaccelerate to 20%. I'm not gonna come with much higher. Google is already huge. Well, yes, their search market share is stable. I don't think it's gonna decrease anytime soon. But the huge moat that they have around that they can use. Because Google search on its own is sure nice, but it is not everything. What is important is that you can integrate everything into the system. Google used to be, we want to get you into Google and then out of Google as fast as possible. That was the quote of the founders. But that doesn't make you much money. What makes you money is when they stay on Google. If they never leave it. If they click on a huge bunch of Google services. And for example, what happened here in the EU, Google was not allowed to use their own Google Maps as the default. Before you could search a place, you instantly had Google Maps open. Or you could just go to the Google Maps tab. But that is gone in Europe. We don't have it anymore. To get to Google Maps, you need to type in Google Maps into Google. And of course, that is just small chips away at their moat, at their whole ecosystem. But these small chips here and there, one feature there, one feature there, I don't think Google is gonna be able to increase their network anymore. Now, of course, even without that, Google is still a great company. It has great assets. YouTube, Google Search, Android, all great assets. But do I want to pay a 50 multiple for that currently? And one big question is, are capital expenditures gonna go down? And will they still be able to grow with lower capex? It currently doesn't look at it. They spend more and more each quarter, just as Nvidia's revenue goes up quarter over quarter. Let's say they scale this back to the normal levels, so that's around 20 billion more per year. That leaves us around 60 billion free cash flow after stock-based compensation. That is still a 33 multiple. Google is a great company, but am I gonna be willing to pay a 33 free cash flow multiple for that? If capex goes back down. What would I currently pay for Google? Let's see. Now if we assume the 40 billion in free cash flow after stock-based compensation, that's around 3.2 per share. What do I think Google is gonna grow at? I would say 15% in revenue growth for the next 5 years sounds very reasonable, plus 2% in net share buybacks. Slight deceleration afterwards. What is a fair multiple for an asset like Google? I would say around 17. 20% payout ratio, little reduction due to taxes, gives us an intrinsic value of $73 a share. 55% below where it is today. I think free cash flow is not going to stay as flat as it is right now. I think it's going to have a bit of a spike. Not a huge spike, but a bit probably. What if it is a huge spike? Back to $5 per share. And Google goes back to 25% revenue growth and 20% afterwards with 2% share buybacks. Plus, because it's so high growing, 25 multiple. Well, yes, then it is a screaming buy at 355. But I don't think Google is gonna achieve 20% long-term revenue growth over the next 10 years. There's too many challenges ahead and they're already too big for that. Now, what if it goes a bit worse? Basically, growth rates stall a bit because their mode is being attacked, their network is being destroyed, plus only 15 multiple because it's not such a high quality business, then $48 a share. I would say this is more of a realistic assumption. Maybe a bit more pessimistic, but there's risk in Google, and I just don't see myself currently getting compensated for that risk. So I'm passing on the stock. What do you think? Write down below. Have a good day.